Quick disclaimer, everyone. ASX Trader, myself, and most of the markets is an authorized representative of ShareX Australia, and this content is for general educational purposes only and does not constitute financial advice. Okay, the market has taken a bit of a turn. So for the last 1, 2, 3, 4 weeks, we've had a bear market. And as I mentioned a month ago, so 1 month ago, is the market about the top key warning signs? The signs were there. So you can't say, where did this come from? Or it's because of this or this news event. The market was showing the signs that it was going to turn around before it did. And this is why I said I'm being cautious. And I'll just quickly show you a quick glimpse of what I was talking about there so that you can see. So in this part in the video, I was talking about the fact that last time we had a move, this time we had the correction, we've had the exact same move up now. So the fib 1-to-1 extension was hit from that move there, meaning that if we go by history, it's the time to be here. That was one thing. Okay, so I'll just play this part and you can see.
Distance is the same right now. And what I'm also seeing is the same blinkers. So the same blinkers I saw on this market, which enabled me to see the top on that and get out, I'm actually seeing right now. So as I always say, we don't act on blinkers though, or signals, but I am very aware that they're happening. And because I'm aware, I'll never get caught off guard. Okay. The market is very much like a car. So when you go driving, cars don't just move around without letting you know what's going on. You know, they'll use their blinkers left and right to let everyone around them know I'm turning left, I'm turning right. Sometimes they put it on early, sometimes they put it on later. The market's the exact same. The market will put on blinkers and tell you when it's going to turn around if you know where to look. And I'm going to show you an abundance of evidence as to why there are a lot of blinkers on right now, which is why I'm being very cautious right now. I'm not exiting the market, but I'm not bullish right now. So what that means is that I'm holding anything I'm in unless it changes, but I'm not looking to add positions right now because I'm seeing some blinkers and you'll see what I see in a moment as to why I'm going to play a bit of defense. All right, so
I'll leave it there because I'm not going to show you the whole video, but you can see the blinkers were on. The market was telling us it was going to turn around. So this didn't come out of nowhere. Okay. From there, what I was talking about was the fact that we were buying higher. This would be now the first time that we're not buying higher since the bottom of the market here. Okay. So that is definitely something to take notice of. And like I talked about, when you unpack market tops, what they'll do is they'll come up and grab the liquidity first, which is what I talked about here. It came up, grabbed liquidity, and then roll over. It's very, very similar top. And the only reason I know is because I've traded this exact top in the thing. If you look at how it's moved, how it's gone 1, 2, 3, 1, 2, 3, and then it rolls over. It's called an orthodox top. So it's where it comes out and grabs it. And I'll just show you. Exact same thing happened here as well. So we had the same thing here. We went 1, 2, 3 down, 1, 2, 3 up, grabbed the liquidity from there, and then we rolled over. So the exact same thing. I expect we're going to get a bounce soon. Everyone's kind of too bearish, and it's we've had quite a move down, and we're kind of sitting around here right now. I'd be surprised if we don't get some form of move very, very soon. Also because we are sitting in the recent zag zone as well, which is back here. So if I pull this back now, we are coming down into this zone. I would be very surprised if buyers don't step in somewhere in this 5,500 to 5,600. Okay, super, super surprised. We'll be really overbought by then. That is what we'll be looking for then, is when they step in, and let's say it's around here, when they come in, that's just been a big zig right now. We'll be looking to see that move up. So what I'll be looking for then is your fib retracement coming back. I don't know what is going on my internet. It's super slow still from there. And I'll be looking for a move up to here. In particular, that fib 500 you'll see will align there. So I probably expect something like that where it comes up, rejects somewhere around here, this 57.50 to 59. And then if it does reject there and it needs to print a higher low and change to be bullish. If it doesn't, if it rejects and comes over, then that is what's called a non-failure swing reversal. okay, which is where you ask the question, why are they buying lower? Why are they selling lower? And then why aren't they buying off this? This should be a massive discount. Like the market would be down 10%. You know, it should be buy, baby, buy the dip, which they will. But then if they're not buying the dip again, that's the market telling you something. Okay, and that means then we're not just correcting that last move, we're correcting the whole move. So then what I do is I get the fib retracement, pull it up, and then we're looking for a much larger move down to around this area down here. Okay, then the same process again. I'd be very surprised if, let's say it did do that and it rolled over and it came down. If they don't step in here, then we might not just be correcting this move, we might be correcting the whole move. Okay, which means we're going back further and further. And that's just how the markets work. They zigzag, zigzag, zigzag. So we just take it one step at a time. I've got an evidence to say that it could be a major, major, major top, which is why I'm not mucking around. I'm never going to get caught holding the bags. I'd rather get out because I can always get back in. Okay, and that's the beauty of it. So at the moment, I'm defense. I've probably sold 25 to 30% of my stocks of just changed market structure or stop losses that have been hit. I'm just lucky that a big part of mine is in gold miners, in particular the Australia. So they're still really strong, still looking really good. Just got to be careful on growth stocks. So something that I really want to show you now is the NDX SPX. So this here right now is putting in what to me is a distribution top. Okay, so what we've done is we've come up, we've got the spring, so they're selling here. Again, grab the liquidity, selling here, selling here. Now we've just broken that trend. We've changed market structure. Okay, if we break this line right here, then that becomes a distribution top. And that means that the NASDAQ is being distributed against the SP 500, which means, and again, it's not like the fund managers there going, let's sell the NASDAQ and put it. No, what it's showing you is that money is rotating out of growth, okay, out of risk on, which of course it will be. Growth was really good when money was cheap and we had low interest rates, but we don't have that anymore. Okay, so let's zoom out and let me show you what I'm seeing on this. This was the tech bubble where growth got smashed last time. From 02, we've had cheap money and growth has done really well compared. But from that 2021 top, which is what I talk about, see how we've been going sideways now? We're no longer in this big uptrend like we are. And this is what I've been talking about. This is why I knew the halving cycle would be broken on crypto, because we're not in that same phase. Like crypto was born here. This is what crypto had lived in before, massive growth. Now it's not. If you notice this new crypto bull market we've been in, this hasn't made a new high. And on top, what it has just barely, but if you look at it, it's done it on bearish divergence on volume and RSI. Okay, so from that top to that top, bearish divergence, and now this recent top coming up here, bearish divergence, and you can see the volume, bearish divergence. So it's a textbook top to me, and that's why if we break through there, then again, that just what is going on with my mouse? Sorry guys, that internet must be so slow because I'm at the cyclone at the moment, and internet and Wi-Fi is terrible. Anyway, let's try and get through here. So again, what that tells me is that was the fake out, and then we're coming back within, which means we're at least coming back down, probably expanded flat, or it could be, again, correcting this whole move here, which growth stocks. Here, okay, so you get moved down to this kind of zone to it, which, again, already we've had a 10% drop in the NASDAQ just from there, so you can imagine how big the drop could be if we do come down on growth against these kind of things as well. So yeah, just got to be careful. There's some massive signs there on that as well. The other thing is your gold to Dow ratio. Okay, this is something I put in my recent article on the Career Mail. So as you can see here, This is gold to Dow. So this is how much gold it takes to buy the Dow. And as you can see, we're on historical support right now. Great Depression, energy crisis, tech bubble, AI bubble. Okay, and if you also match that up with the Shiller PE ratios, you can see up here, the only times we've been this expensive, Great Depression, tech bubble, where we are now. The average is 17. It's more than double the average right now. So equities are historically expensive. On top of that, if you look, we can hang down there for a while. So you can see 61 to 71. For 10 years, it was undervalued. But now let's zoom in on that area. So we have just changed market structure. Above here, so changed here. Once we get above there, lights out. Okay, but on the smaller time frame here, so from the 21 top again, that's changed market structure. So why is gold outperforming equities? That's money rotating into risk off over risk on. All right, so another thing to keep an eye on there at a major zone. Every week I go through every index and I go through every sector, etc. And last week, every sector was bearish. And this is why I laugh when crypto moon was going, alt season. I'm like, guys, have you looked at something outside the little pond that you live in? Because there's no way crypto is going to go bullish when every single sector in the stock market is bearish right now. And index, they think it's a separate thing. It's not. It follows the exact same path. It follows liquidity. It follows the macro. It doesn't have its own little life. Okay, it follows just like everything else does. Bonds move the world. Not crypto, not equities, not anything else. Bonds do. Okay. So if you don't understand that and understand that you've got to follow the bonds, and the bonds will then, you got to remember, bonds are over $100 trillion market. That's where the majority of wealth is. That is what people care about. They don't care about a $2 trillion asset class that's like chomp change. Okay. They care about the major moves, and bonds is what moves the market. But yeah, every single one is bearish right now. That's energy's in a downtrend. Materials is in a downtrend unless we break up through here. Industrials did a throw over here at the moment. It took out the high of the rising wedge, rolled over. Discretionary, same thing in this reg. So I'm looking for it to bounce there and reject. Consumer staples rejected the zag zone here. Healthcare fell below here, continue the trend. So it got distributed at the top there. I was hoping it would break out there. It didn't. Financials put in the top, same with Commonwealth Bank. So selling higher, higher, higher. Now they're not buying there. So again, I'll probably get a bounce soon, put in a lower high. Technology. So this is like, look at technology if you're looking for. So higher, 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 double top, broke the neckline. Okay, so technology changed market structure on bearish divergence. So technology turned bearish. So crypto is not going to be bullish when technology is bearish. Communications sector, again, reject there, but that's coming back to here. Utilities sector, this is the one that could go good, but again, defensive sector. And real estate sector broke up and then came back within. So the only ones that are looking slightly like they could turn around is utilities, XMJ, precious metals, and energy is looking close. And if you look at where we are in the business cycle, they're all the things that start to perform well at the top when technology tops out. So anyway, it's just times to just be careful. For me, I could build a case as to why we're in trouble. So what I need to do is let the data tell me that we're okay. And that means that market structure has to turn around. So when we go to the S&P 500, I need to see, and this is the other thing, looking at this one. Let me go in the log. So also matching up with that Shiller ratio and gold ratio. 1929, Shiller ratio is 31. We had 25 years of dead money. 15 years of dead money there. 14 years of dead money there. And as you see, we're at the resistance level right now. Do we now have, and we're at 37. So the only time we've been higher is the tech bubble. Even the Great Depression wasn't that bad. Good times to buy equities or long term is when you got single digit here. For the Roaring 20s here. They were all the good times to buy equities for long term. What's funny is even the bottom of the tech bubble GFC, it was still expensive then. But anyway, we could easily have dead money. We're at the resistance now. And then on top of that, if we bring in some technical indicators to match with it as well, you can see on this 3 monthly, there's only been 3 times. Those times that we've been exhausted here were the only times that the RSI was also in the extended on the 3 monthly. So we've had bearish divergence coming up from here. Top on bearish divergence here as well. Into it. Here, the bearish divergence going into the dead money, and then the Great Depression. So 1, 2, 3, 4 times are the only times that we've had. And then they also happen to be the 1, 2, 3, 4 times that we might get dead money. So again, this is why, again, this is big picture. This is every candle's 3 months. So this is looking at big picture. This is why I say, why play with fire when you don't have to? This asset is historically expensive on technicals, fundamentals, and macro. And then I just showed you something that was historically cheap. So as we know, there's going to be ebbs and flows within that, but why play with fire when you don't have to? Okay, so, and big money knows that because they play the long game. So what they do is they rotate out of expensive and they rotate into cheap. And they do that on all time frames. I do it on the daily, the weekly, the monthly, the quarterly, the yearly. And that's why we get these ebbs and flows and we get these zigs and zags, because they do a quarterly rebalance and they go, okay, we've made a lot of money there. Okay, let's rotate for the next quarter into here. And it just rotates in and out, in and out, in and out. And it happens on all time levels. That's what traders do. It's what I do. You know, if in my trading account, if I'm extended on the daily and I see weakness, I'll rotate into something else that's doing the opposite. But that's different to my swing account, which is looking at the weekly and monthly. That's different to my long-term account, which is looking at the monthly, 3 monthly. Okay, so you've got to know what goal it is that you're trying to achieve. And when you buy something where you're looking to just make money today, next week, next month, next year, whatever it is. In regards to crypto, Bitcoin is... So Bitcoin is in its zag zone now. So again, buyers have to step in here. So this is where, if we're going to bottom, I said we would bottom, which is here. So in this kind of 72 to 77K, and we hit the 77 just today. So anywhere from here is where Bitcoin could have buyers step in. If we lose this 618 zone, again, why aren't they buying off the zag zone? And then it's fallen through major resistance. Again, I'd be very surprised if we don't bounce in some way here, but then is that just a bounce and then a rollover, or is it actually a bottom? Okay, that's the thing. But already we're starting to get some diverging signals. I'd be super surprised if we don't have some kind of buy step in somewhere in here. So if you're looking for crypto, as you guys know, I exited right there. Actually, it wasn't there, it was there. And I've been on the sidelines, and it's been a very good decision because that's Bitcoin that doesn't look too bad. Altcoins have been absolutely smashed. They're all down over 70, 80%. If you're looking to go long, you're looking for a change of market structure off this zone here. But again, as I just showed you on the other stuff, what if this is not just a correction of the move and it's something larger? We'll know that if we break this level here. Okay, because if we look at history, all of these moves, again, it's just about buying off the zag zone. So the first one here, bought off the fib 382. So zag zone there. Okay, and then this move, bought off the fib 500. Okay, here's the zag zone off the fib 500, off the fib, sorry, internet shocking. Fib 500, and now same thing, we need to buy off that zag zone. the reason why I'm actually being more cautious than not is also because of what I'm seeing on the stock market, but also because, as we know, accumulation public excess, and then we get divergence from the third to the fifth. Let's check that out. And we'll go to the weekly, you can see it a lot clearer. You can clearly see we had bearish divergence off that last high. Okay, which means it came up on, sorry, internet shocking, I can't even draw, but bearish divergence from there. And then if you look at the volume on that move as well as it came up, so let me just get rid of RSI. You'll also notice that volume did not confirm that last move up. Okay, so again, that last move up, bearish divergence, and that also last move up, bearish divergence. Something else you'll notice is that IBIT, which is your Bitcoin Trust, Bitcoin made a new high there, but if you look at the ETF, it actually made a new low. So that's bearish divergence, and the fact that why did the Bitcoin ETF make a new low there, lower high, but that Bitcoin, so that to me was a liquidity grab. That's the our theory indices don't confirm. Again, put in the top, and again, same thing. There's a lot of sell pressure in here. There's a lot of sell pressure on alts. Like if you pull up an alt, let's look at Beam. That's a shitload of sell pressure. They're selling. They're dumping into it. It's not like it's coming down on lower in volume. So it's still, it's still showing weakness here. So I need to see a major reason as to why this thing's reversed before. I think, like I said, I think we'll get a correction soon, which is what I'm showing here. We've had quite a big move down. I think we'll get a bounce here, which will bring in that buy the dip mentality, get some more kind of sentiment reset, but it's just not looking healthy. Something else that's really interesting, if you look at the QQQ, which is the let me get rid of this, the NASDAQ ETF, and let's go weekly. From its inception, from here to where it topped, where the NASDAQ top happened, we had 378 days, 54 bars. Okay, 54 bars, 378 days. Now let's look at IBIT. Oh. 54 bars, 379 days. It's the exact same distance from when the ETF came in as to where it peaked. Again, very interesting, isn't it? But very, very interesting that the same thing happened there. So looking at here, what we want to do is we've filled that gap now and we want to bounce, which is what I said. This is the zone. If it's going to bounce, it's going to be here. So if you're really bullish and you think it's all good, then this is the time to look at it. For me, I'm being a bit more cautious. I want to see that change of market structure, but sentiment, everything will bounce soon because, as I showed you, even with the SP 500, it's coming down to the zag zone. So, if you don't capitulate now, we should get some kind of bottom this week. And then what we'll do is we'll see when that bounce comes in, is volume confirming it or is it a corrective move? And then you can sell into strength into the zag zone instead of selling now at the bottom of the impulse. All right, so it's all about being prepared for each way. But yeah, that's it, guys. I just wanted to share that with you. The gold miners and stuff are still looking really good. Like EVN's still here. It's looking like it's about to break out here. Volumes coming in. I got to bring up my, volumes really starting to come in here. That could about to break out. Yeah, good volume coming in here. So yeah, like I said, I've got a lot of mine in Australian gold miners. So that's why my portfolio hasn't been affected so much. Anything that I had in other stuff like growth and that, which were only short-term trades anyway, they're gone. They're pretty much all gone. But I'm mostly looking at kind of precious metals, energy, not yet, but it will turn around soon, I believe. Utilities, things like that. So yeah, just stay safe out there and just kind of get rid of that buy the dip mentality and just try and follow data. Because like I said, even when Trump came in, I said, I'm selling. And they go, why are you selling me? And Trump's on it. Because I don't follow hype. I follow data, even if the hype's from the president. Okay. And that was right. Okay. So data doesn't lie. Follow the data and you'll always be right because you'll be on the right side of the market. A quote I always love saying is there's no bull or bear. There's only the right side of the market. And following data keeps you on the right side of the market. It's kept me on the right side of the market with crypto since the lows. Okay, as you guys know, I knew something was going to be up with this halving cycle, but I didn't know how it was going to be up. But I've been on the right side of the altcoin moves every time because I followed data, and that's the key. Yeah. If you like the video, please like and subscribe, and I will catch you on the next one.